Good morning, everyone. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. Good morning, Steve.
Good morning.
How you doing?
Yeah, not bad, thank you. How are you?
Yeah, all right, thank you. So welcome back, everybody, to the show. Obviously, a bit of disruption of late. Not doing them every day as we have done previously, just to some changes in our schedules. But we're still going to do these when we can. And as always, if anybody wants to get involved, post up comments. Let us know what markets you're looking at or positions you're in currently. We will do our best to cover as many as markets as we can. As usual, we'll go through the latest headlines. So let's do that first. Some dovish rhetoric yesterday from the ECB. The ECB Council members stated that overhiking is not an acceptable position, adding that the economy is already taking a hit while inflation is easing as quickly as it went up. The overall flow of rhetoric remained broadly hawkish. Same sort of theme with the Federal Reserve. The Fed Chair Powell commented that he believes that there is a more restrictive policy coming. He added that data on jobs, activity, and inflation have all been strong over the past quarter, and policy has not been restrictive for very long. He also stated that labour costs are high and in non-housing services, and that the Fed needs to see more softening in the labour market. Markets are now even more confident that there'll be a further rate hike in July. 85% is now the factored in chance of a rate hike next month. We saw similar comments from Andrew Bailey. He suggested that the data showed a clear persistence of inflation and that there will be a worse outcome if the bank doesn't bring inflation down. He also pointed to a very robust labour market with a smaller workforce than was the case before the COVID outbreak. We saw some net dollar gains yesterday due to the hawkish Fed rhetoric. Expectations of a July rate hike and unease over global economy continue to provide net dollar support, with the dollar hitting a 10-day high. German inflation data due out today, so that will be keenly watched. The consensus forecasts are for the annual rate to increase slightly to 6.3% from 6.1%. We've also got today US weekly jobless claims, and the trends will be important, and the latest US jobs claims will be released at 1:30 today. Consensus forecasts are for a small increase in the claims to 266,000 from 264,000. We've also got the Riksbank policy decision today. So that's the Swedish central bank. They are expected to increase interest rates by 25 basis points, taking the overall rate to 3.75%. So let's get into some charts. Steve, do you want to kick us off with a look at cryptocurrencies?
Yeah, sure. I'll just share my chart. Just share my screen. Bitcoin remains elevated. We've had the break up to the upside. Let's get rid of a few of these lines so it's a little bit clearer. And we've managed to sort of like pull back into this resistance area. You can see on the weekly chart up to the resistance all the way up to 32,000, 33,000 probably if we take this swing low from January 22, and these peaks that we saw in May 22, 32,000, 32,500. Approaching those sort of levels, we have got a inverse head and shoulders formation, which we had a measured move target on that up to 35,000. So that's one of the target areas we're looking at the moment. However, if we sort of like drill down on the daily chart, we can see that this upwards momentum is stalling on the MACD. You can see that it's slowing down. This could be a little pause in the rally higher. We could be getting a little bit of a bullish flag formation, or if we get a breakdown below the 29,500 level, maybe we're giving up. This is a short-term top in the move higher. Overall, I'm still bearish on Bitcoin, and will be for a good while, I think, until we get above that sort of like 45 to 50,000 level. So in the meantime, 35,000 is probably the target, the short-term target, and but yeah, it's the acceleration higher has stalled of late. XRP also one we watch. This inverse head and shoulders played out nicely, hit the measured move target at just below 55 cents. Since then we've had a bit of a pullback lower. We've still got the SEC and Ripple court case going on, so there's no sort of like well, we're expecting a result on that soon. Everyone talking about XRP moving 5 to 10 times higher after they win that case. I very much doubt it, because I think there'd be a lot more priced into this, or we would be a lot further away from these low levels that we've seen of late if that was the case. So potentially this spike higher recently, when we got the spike higher to the 13th of June, in line with the 29th of March spike higher, so it looks like we could be forming a double top formation. The neckline for that is at 41 cents, so a break below 41 cents should accelerate things to the downside. So XRP not really performing the way that all the prophets are talking about on the normal social media channels. Let's take a look at more solid assets like gold. This has had a breakdown lower of late, and again, we stalled in front of the all-time highs. This is the third time we've stalled, and the same sort of reversal we've had. It's almost like you can use technical analysis to sort of predict the future price action. The breakdown, we're down at $1,900, and we're this is a psychological level more than anything. The real support, I would say, is probably the next step is 1870, and then 1800 just above there. That's where we're sort of like seem to be heading for at the moment. As you can see, the last few times we've got up to this sort of move has been on as like more of a safe haven drive, geopolitical tension. We've got obviously August 20, we've got March 22, and May 23, where we've tried to break through that sort of 2075 all-time high and haven't managed to do so. Obviously, the dollar playing a big part in this as well. But yeah, so that's what we're looking at the moment. The shorter term levels to watch, $1,900 psychological level, and below that with 1870, as I say. Crude oil, that's remained under pressure as well. Let's take a look at the daily chart, give us a little bit more shorter term coverage on this. And price action from Monday the 12th, we've had a rally higher. Actually, this isn't showing me the most recent price action. It keeps doing this, Joe. It keeps sort of like dropping, not updating the chart for some reason. I don't know if there's a setting that has been changed on this. But yeah, the more recent price action, we've had another dip down to that $67 level in WTI crude oil. Yesterday's price action, we had oil inventories. That was positive. The net result was positive for oil prices, and we had that squeeze higher. Saudi Arabia, I see, on their own cut oil production by another 1 million barrels a day, trying to sort of like support this price in oil, and the oil inventories doing the job really. But the real level to watch, I think, on the support side of things, $67. A break below there, I think, will open up the downside, and we've got resistance levels up above coming in around about the $72.5 level. The more major one just below the $75 level on WTI crude oil. Brent crude oil, pretty similar price action. That we've been down to that supportive level around 71.60. Resistance coming in above, really the main one coming in at around 78.50. So they're the levels to watch. Good sort of price action over the last couple of days. Obviously, again reflecting higher after the oil inventories yesterday, and pushing even higher this morning on the Brent crude side of things. That's still trading at a decent premium to WTI crude oil. That's about it on this side of things. Joe can talk us through the FX, the dollars, and I can dive into a few indices afterwards.
Yep. Okay. Sounds good. Right. Let's take a look at the dollar index then. Have a look at how that is shaping up. Let me just bring up that. Okay. So as we said in the commentary, the dollar has reached a 10-day high. So we can see prices are attempting to push higher. Yesterday we saw a very bullish day. We engulfed all of the losses that we saw in the previous session. We can see support is being found here at this blue line, which is at 102.23. All in all, pretty sideways, choppy price action that we've seen now for a number of months on the US dollar. A couple of dips down to this major level of support down here at 100.82. But each time the buyers have stepped back in to drive things higher. So obviously still wranglings ongoing with regards to the direction of the dollar. We're getting comments out from Obviously, Powell being very hawkish, suggesting there's going to be a further rate hike, and that is meaning that people are a little bit uneasy and maybe moving back towards the US dollar as a safe haven asset. So above, we've got a couple of areas of resistance at 103.87 to 104.20. So for the time being, it looks like we're going to remain quite range bound and probably still quite choppy. So that's going to have an impact on euro US dollar. That's down today ever so slightly. We can see yesterday we didn't quite get the engulfing candle that we saw on the dollar index, but we did do a pretty decent job of unwinding those gains we posted on Tuesday. But all in all, pretty choppy in the very short term. We've got some resistance around 109.42, which seems to be preventing prices from moving higher. On the sort of bigger picture, we had a bullish channel that was in place here, which broke down on the 17th of May. And since then, prices corrected to the downside, and the rally up is just coming back into this kind of break area, really, or this sort of cluster of price action that we had in this period here. So all in all, in order to get more bullish on this, we need to see a break through these resistance levels up here. That's at 110.75. If we can get above that, then we start opening the way to this 61.8% fib level on the longer term chart, dating back to these highs that we posted in January 2021. So still a bit of a mixed bag there for me. Not really too much clarity on the trend. And I think it's going to remain difficult to trade on that basis. Let's take a look at cable. This broke through resistance at 126.66. This previous high that we posted back in May 22, we pushed through that level. We're now seeing a pullback into that level. Pretty nasty day yesterday, actually. A big red candle that you can see there overshot what should have been support of 126.66, and now we're below that. But I think I can give it a little bit of grace because we've still got this trend line supporting prices. So a pullback into this region today may provide an opportunity to buy. But bear in mind that obviously this hawkish rhetoric and the chat that's going on is being supportive for the US dollar, so that could have a say. Let's take a look at dollar yen. That's been quite interesting. Although we've not seen too much from the dollar index, again, it is at a 10-day high, but we can really magnify how weak the Japanese yen is at the minute. This continues to move to the upside. It's smashed through that 61.8% fib level at 142.49 as if it wasn't there. And now we're approaching some resistance levels at 145.10. That's a low that we can see from back here in October 22. And we've got another low on November the 9th. Above that, we've got a 78.6% fib level. Probably looking a little bit overbought. We can see the RSI is above 75. Not an indication that things are going to slow down. But maybe something to keep an eye on. Ideally, what we'd like to see, if we're going to believe any turnaround on the RSI, is maybe some divergence. That's where we're going to see maybe lower highs on the RSI, but price still making high highs. That may be an indication that momentum is then starting to slow, but no signs of that at the moment. Any other currencies been requested? I don't think so. So I'll just have a flick through some of the other majors. Let's take a look at Aussie versus the US dollar. So this has been pretty wild. Prices were range bound and sideways for some period of time. We then started to break down potentially through this support at 65.20, but then came roaring back with a very strong move to the upside, but an equally strong move to the downside. So some decent moves if you can catch them, but pretty choppy, pretty direction. There's no real definitive trend in place here on the daily chart. I'm assuming it's the same for New Zealand dollar versus the US dollar. Yeah, pretty choppy, pretty sideways, ultimately still moving lower by the looks of things. Big move to the downside yesterday on that dollar strength. Support down here at 60.25. Dollar CAD, let's have a look there. So that was trading in a really large range for a significant period of time. We saw a breakdown through the lower end of the support of 132.25 and now trying to come back through that. Potentially broken a short-term trend here, pretty tight one and pretty steep, but potentially triggering a bit of a corrective move to the upside here. But all in all, again, pretty challenging markets. We can see here the longer term trend still remains bullish. We've got this blue line in place. Prices have sort of rallied just ahead of that, which is quite encouraging. But yeah, still lacking a bit of conviction for me on this at the minute about what to do. So I think I'll leave it there, Steve.
Yeah, lovely. Cheers, mate. Just looking at the indices. FTSE just having a move in the last hour. Well, last 17 minutes to be more exact. Looking at the daily chart, we've obviously been on the back foot over the last sort of 10 days or so. And we had a level of support around about 74.40, broke down through that on Monday, this Monday, formed a bullish hammer and then reacted higher from there. But it looks like we've stalled after Wednesday's price action and reversing, giving up those gains from Wednesday. Yeah, that's looking a little bit more negative this morning. Looking at more, it's approaching sort of like a bit of Ichimoku cloud support, really sort of like the next level to watch, 74.70. That should provide some support, but look out if it doesn't, if it carries on through there. DAX is performing in a similar sort of fashion, stalled around 15,928 and then rallied higher over the last couple of days. It's poked its head up this small. Sorry, this is an hourly chart. What am I looking at an hourly chart for? It's far too short term to. I'm thinking about the gun to head trade idea already, Joe. We've had that sort of like reversal from Monday in a similar sort of way. Morning star formation, nice formation, and extended high on Tuesday, sort of like played out really nicely. Got a nice little rally there, but we've started. We haven't sort of like managed to take out yesterday's high already today, and giving up at some of those gains this morning. EU50 doing the same. Really nice reversal formation from there. But have we stalled? If we look at that on a percentage basis, Fibonacci, get Fibonacci on there, stalled just above the 61.8% fib level. So that may be a little bit of an interesting area to fade into with the more recent price action. Dow 30 stalled at 34,000, and we've reversed from there. Yesterday's price action was negative overall. Looks like a hanging man candle after this same morning star formation. So we had this like from Friday 16th of June down to Friday 23rd of June. That whole week, as you can see on a weekly chart, formed a bearish engulfing candle on some of these. Nasdaq not so bad, but the FTSE that continued to move lower. The DAX bearish bearish engulfing candle at resistance level. So negative, same for EU50. So these weekly candles are sort of like starting to kick in a little bit towards the end of this week, really sort of taking hold. Nasdaq seems to be sort of the one bucking the trend. The tech sector obviously not doing so badly, which is a bit strange, especially with these interest rate moves going on. A lot of the tech sector is obviously heavily invested in sort of borrowing to fund its efforts, because none of them make money. So it's all a big scam in my eyes. But anyway, that's a I don't know if we've got time for that sort of story, but yeah, let's move on and see.
Might get in trouble there. Yeah, so let's move on to the gun to the head challenge then. So this is when Steve and I pick trade ideas live on the stream, as if we had a gun to our head. A couple of rules that we need to follow: must have stops and targets. Obviously, that's a given. Risk reward ratios on these ideas must be 2 to 1 or better. So for every dollar that we risk, we want to be making at least 2 as a return for the risk that we're taking. The trades are closed at 9 p.m. UK time unless the stops or the targets are reached before that. And we risk 1% of trading capital per trade. So we've got a live account. It's been a challenging year with it. I mean, we're sort of still in the game because we don't risk the house on everything that we do. The maximum risk we have on a per day basis is 2% of the account, and obviously hoping to make multiples of that in return for the risk that we're taking. So, Steve, I don't know if you can bring the account up. Have you got it there?
Yeah, I'm just looking at the last winner, Joe. The last winner was 2nd of June.
Right, we're due one then, aren't we? I know we had a week off or longer.
Yeah, we pretty much, we got being hammered in the month of June. Funny enough, on our intraday trade ideas, we've had a similar sort of performance in June. We've had a sort of like positive results all the way up until June, and this has been our first negative month of the year. So it's probably filtering through a little bit. It's been quite a tricky market from a technical perspective. It's not really doing what we predicted to do, obviously. But yeah, hopefully we can nail a couple of winners today to make it feel a little bit better.
Well, I mean, it feels like the summer months are truly here now, and it's a normal phenomenon in the market when this time of year things do slow down. People go away on holiday. There's less interest in markets. Obviously, there's lots going on at the minute with regards to the managing of general economies, and this is hurting markets. There's no definitive trends. We really struggled going through those charts today to sort of highlight any sort of major opportunities, I think, at the minute, and definitive trends that are in place. So it is going to be maybe a struggle for a little while longer. So we'll shrink our time horizons on these short-term trades and see if we can pick out a couple of winners in the short term. I mean, I struggled a lot, I've got to say, Steve, trying to find something. I have found something that I'm going to go with. If you want me to take the lead on this.
Yeah, go ahead, mate. You're welcome.
Okay, so I was looking through all asset classes. I looked at currencies, I looked at commodities, I looked at indices. There wasn't really anything that stood out for me as being of interest. I mean, typically when I'm looking at these ideas on an intraday basis, I want to look at the daily chart first of all, just to confirm that there is some sort of pattern or guide in place with regards to trend. And then I'll drill down into the intraday charts to see if there's any sort of formations that really excite me. So this is New Zealand dollar versus the Japanese yen. We can see here that there's been a range in place for a significant period of time. I mean, arguably going back to May 22, but really I'm focusing on these ones here in black, which date back to September last year. And have been in place really ever since. But what we did see here on the 16th of June is a break to the upside, a closing break above this resistance at 87.66. Now, prices have been pretty choppy ever since. I'm not really too encouraged by this candle that we saw yesterday, but just going by the technical setup, seeing that we've got a pullback close to this 87.86 level should, in theory, as a technical analyst, provide some support. So we're into that level today. We're getting a bit of a bounce as things stand. Looking at the hourly chart, arguably a little bottom formation here. It's very, very small, but there are slim pickings, it feels like, in the markets at the minute. So I'm going to go with this. I'm going to attempt to buy New Zealand dollar, Japanese yen. Obviously, based on this setup here that I'm looking at, ideally I want to see a close above this 87.58 level on the hourly chart, and we've still got 36 minutes before that's the case. So I'd like to get this on, Steve, if possible, with a stop loss at 87. Sorry, my stop loss is at 87.58.
Yep.
And I'm targeting a move to 88.87, which is a move back into these highs that we saw.
2.27 to 1, 2.3.
That's right. Yeah. So I've got 2.5, but a bit price movement, bit of spread to take into account.
Yeah, we need some winners, Joe. We're at we're equaling our drawdown, worst drawdown in the account.
Okay.
I think we got down to about 1790, 1790 before. So
okay,
got to get something going here.
Yeah.
Yeah, that's on, mate. So we're good on that one.
Okay, over to you then, Steve.
Yeah. What am I looking at? The only one I'm sort of like looking at is gold. Gold looks pretty weak, and we sort of just bounced off a little bit of support here. And it's a question of whether we're going to continue that move lower. What did you think of the dollar?
Oh, I mean, it was on the front foot. It's 10-day high, but all in all, sort of directionless, to be honest.
Yeah. It's either that or I was looking at the EU 50, but that sort of seems to have bounced back since we've just had that little dip there. So I don't really.
500, is that looking any good? That's looking pretty strong. That was my next candidate. I don't want to sway you in any way, but the daily, it's had a breakout and maybe had a bit of a pullback on the in recent sessions to trade into.
Yeah, that goes against my religion. Actually buying indices, Joe. So you're never going to convince me of that. Okay. I was actually thinking, are you sort of talking about this like bearish engulfing cloud on the 4-hour chart, and it's sort of stalling at those sort of levels? But I can see what you mean. It's sort of like maybe had that break higher, pull back, and then go again, which maybe is what the EU 50 is doing as well. Which I was going to sort of like looking to sell about 15 minutes ago. No, less than that, 10 minutes ago. And now it's turned around. So yeah, looks like them indices are sort of like pushing higher, which goes against my my inner trader instinct. But sometimes it does work. So yeah, I'm going to move away from there very quickly before you convince me of doing something that I shouldn't do. The one thing about the gold, obviously, if dollar sort of 10-day highs, it's going to push a bit further, then maybe we've got an opportunity in gold to actually continue to sell into it. We've seen sort of support is just at 1902. We've got a psychological 1900 level, and there's not a lot below that. So I'm going to go with this. I'm going to sell gold. We're going to sell it, risking 1% there. That's I'm just going to do that, Joe. Just like do it. Screw it. Let's do it. If anything, I sort of think, yeah, yeah, okay. I'm just going to leave it like that. I'm not going to say anything more. I'm targeting the move lower. If we do get that break of 1900, I think we'll get a bit of an acceleration in that sort of like a short-term trend lower. So yeah, I'll leave it at that. I could have made the stop a little bit tighter, but that's probably a fair stop. So yeah, no more to say. Look
Good
away,
luck.
everyone.
Good luck. Yeah, look, hold your breath and look away. Okay, so let's have a look at what's due out today data-wise. Obviously need to be aware of this because it could impact markets. So apologies, this is very small, but I had a lot of data to try and fit in. So there was a Fed Chair Powell speech this morning at 7:30, which is very early for him unless he's in Europe. We've got the German consumer prices at 1 o'clock. So that's the latest read on inflation in Germany. As we mentioned, we're expecting a slight rise in that number. Half an hour after that, we've got the weekly US jobless claims. Tomorrow, we've got US PCE prices index. That's another inflation metric. And so we've also got the Eurozone consumer prices at the same day. Next week, we start ramping up again. We've got US ISM manufacturing. We've got the Reserve Bank of Australia. We've got Fed minutes. We've got ISM data. We've got the non-farm payrolls and the Canadian employment numbers as well. So pretty stacked next week in terms of economic data. And as markets are in the kind of summer months now, where things are maybe slowing down a little bit, that could mean we get some volatility next week. So let's brace ourselves for that and address it next week. Thank you everybody for watching. It's yeah, been a good show, I think, Steve. Let's do the same again tomorrow.
Yeah, we'll see you all tomorrow.
Okay, bye-bye.
Bye.